Hello and welcome to our first trade breakdown. I'll be doing a series of more like a backup for every week's market commentary that I'll be sharing here. Here I will be giving insight and the reason behind why I took every trade. Yeah, the reason behind why I took every trade and my thoughts behind every trade as well. So the model is anticipating the weekly range. So I'll be doing a breakdown of how I'm able to anticipate every week's weekly trading range, be it a loss or a win. I will share my thoughts and the reason behind every trade, why why I took the trade, and what is that thing I saw in the market, or what is that thing I saw in the chart that made me take a trade. Now remember we were trying to trade the weekly range. The weekly range, for every week we have for every week of trading we have 5 trading days, meaning we have 5 different days of opportunity that we can trade in line with the weekly direction or the weekly candle anticipation. So that doesn't call for us trading from the first day of the week being Monday. No, for you to catch or be able to trade the weekly range, it is not a necessity that you have to trade from the first day of the week. No, so for some persons it's possible, but I'm trying to draw attention to myself or how I think about the chart. Mondays can trade very very well. Tuesdays can trade very well. Wednesday, Thursday, and Friday. But it is advisable for the beginning of the week. It is advisable for you to just you might leave Mondays and just study what Monday price action gives you. That will be very very nice, or that will help in you determining what the actual direction of the week will be. But for other times, depending on what Friday has done or the previous week has done, price can just start running from the beginning of the week, being Monday and Tuesday, Wednesday, and all that. But most of the time, Monday can be used to determine or to validate your your bias. Yeah, Monday's price action can be used to validate, or Monday closing price can be used to validate your bias, meaning the reason why you should be looking for whatever you should be looking for in the chart. You understand? So let's go quickly to the reason why I was able to take the trade on GBP USD. From the week's commentary, I made mention of GBP USD, or we anticipated GBP USD to trade to this level, meaning that we expected what a down close weekly candle, a down close week for GBP USD. That is to say, we anticipated a more of a bearish price action for GBP USD, and the short-term drawn liquidity was the previous week's low at 1.26201. This is the daily chart, and you can see how nicely it dropped to that level. Yeah, GBP USD price did this thing, and we were able to trade down to this point. Yeah, this is the 1 hour chart. Um, when I entered the trade, and this is it. Price action did this thing, market did this, and we were able to reach down to that point. And this is on trading view. Here you have the execution. So we are to break down and to see the reason why I was able to take this trade. Now let's go into the trading view and see why I took this trade. This is GBP weekly time frame, and remember, the model is anticipating how the weekly range will form, or how the weekly candle will form for every week. For each week, your goal is to determine, okay, what direction will this week's candle be going? Where is the closest draw on liquidity? Your closest draw on liquidity. These are what we're going to be breaking down. So this is GBP the weekly time frame, and this is the weekly chart, or this is the weekly candle for previous week, for last week's price action. Price traded smoothly to the downside. It wasn't all smooth because we had more of consolidation for the first half of the week, but eventually market traded down and we got to this level we anticipated. Now, because you are determining the, or you anticipating the weekly candles formation, that doesn't mean you should just analyze, or your analysis should be just on the weekly chart. No, for you to be able to to determine how the week is going to trade, remember, for every trading week we have 5 trading days. That is to say, for every weekly candle we have we have 5 daily candle that makes up the weekly candle. You understand? So the 5 trading days, Monday, Tuesday, Wednesday, Thursday, and Fridays, are used to qualify the weekly candle. So the daily chart, the daily time frame, plays a major role in helping us to anticipate how the weekly candle is going to form. So that is to say, your daily time frame is very, very important, just as the weekly time frame is important as well, for you to determine how the next week's candle will form. One more thing, for every week we have a point of reversal and a draw on liquidity. For every week there's a point of reversal, and that is what, there is a point of liquidity that should be taken out. Point of reversal can be comes in forms of the different PDRAs that ICT has taught so far. PDRAs meaning premium and discount arrays. What are PDRAs? Premium and discount array. These are most likely um, reference points in the market that the markets will eventually come back to mitigate their orders for an effective delivery in price. This is my own definition of what a PDRA is. It might be different for every other person, but this is my definition of what a PDRA is. So when you have a point of reversal, after you've determined your point of reversal, the next thing is, where is price going to? Price will go to what? A pool of liquidity. Now, what is liquidity? You can simply say liquidity is money, but we are made to understand that we have 2 types of liquidity. We can say we have buy side liquidity and sell side liquidity. Now, what is buy side liquidity? Buy side liquidity is that liquidity that lies above old highs. Yeah, this is where buy side liquidity. The old highs can be a monthly high, it can be a weekly high, a daily high, or an equal high. You understand? So this is your buy side liquidity. Why sell side liquidities are liquidity that lies below old lows. The old lows can be previous month's low, previous week's low, previous day's low, or just a single low, or an equal low. This is sell side liquidity. Now, one more thing you should understand that price moves from internal to external range liquidity. Internal range liquidity, most likely, a common one that ICT reviewed is the fair value gap. Fair value gap. Yeah, these are internal range liquidity. But for me, I think an order block can also be an internal range liquidity as well. Why external range liquidity is simply, well, these are old highs and old lows. You understand? Internal range liquidity, this is a fair value gap. Yeah. So price came into the internal range liquidity and targeted what external range liquidity, which is the previous week's low. This is the internal range external range liquidity. Price moved into internal range liquidity in form of the weekly fair value gap and traded out targeting what external range liquidity, which is what sell side liquidity that lies below what previous week's low. You understand? So taking this into cognition, we have buy side to sell side and sell side to buy side. Now, for every way, there's a turning point. The turning point meaning what? A point of reversal. The point of reversal comes in form of PD arrays. Remember, one of the PD arrays are fair value gaps. Fair value gap. So, for the previous week trading, price went into what? The fair value gap, a weekly fair value gap, which is a good point of what reversal or a what reference point. This is a PD array. But let's go down to the daily chart and see how this weekly candle traded. How did it trade and why did it trade? Now remember, we are inside we are inside a weekly fair value gap. So on the daily time frame, on the daily time frame, we still had a daily time frame in line with the weekly time frame. This is a good indication that okay, this is a PD array, this is a point of reversal, and we are anticipating price to come there, reverse, and do what? Target what? In pool of liquidity, the short-term liquidity, which is the previous week's low. Put this into your mind. And Friday's price action, price came and closed below. This is the fair value, the daily fair value gap. You can see price closed below this fair value gap. Price closed below it. This is a good indication for it on Friday. Now, on Monday, price traded well, went into the fair value gap, and as well closed below it. Closed below it. Another indication that okay, this could be a good turning point. We can call it a point of resistance, a good resistance point of price. Knowing that okay, we are bearish and we want to see price trade lower. We have anticipated, or we are anticipating the weekly candle towards trade lower. Now, what are the things that makes, or what are the things I use to determine the weekly range or to determine the weekly candles formation? Make use of the market maker buy and sell model. Very important. Market maker buy and sell model. Very important. This is something I use every time. It happens every week. Yes, for every week or in every weekly candle or every weekly range, there is presence of either a market maker buy model or a market maker will sell model. Your goal as a trader is for you to be able to anticipate, see it, and what anticipate its delivery. So this is a good market maker sell model. And another thing, make use of the weekly templates, the weekly manipulation templates. The weekly manipulation template, in the sense that the weekly manipulation templates help you to determine when the high or low of every week has formed. Yes, for every week there is a high of the week, and there is also a low of the week. For a bearish price action, or in a bearish price action, your goal is just to determine when the high of the week has been formed. You shouldn't care less or care more about the low of the week in a bearish price action. No, The high of the week should be your goal. How do you determine when the, or how do you know when the high of the week has been formed? This is what we will discuss in this breakdown. And it is not a must you enter price or you should take your trade at the high of the week. You don't have to catch the high of the week. No, you just have to know, or know when the high, once you know when the high of the week has been formed, the rest of the trading day, let's say you're bearish and you've determined that okay, the high of the week has been formed on Tuesday, the price action on Wednesday, if you see a rally up, use that rally, see it as a manipulation, see it as a fake move, and what, sell into the rally. Yes, this is how it's being done. So Monday's price action, since you are determining the weekly range, the daily time frame is very very good, and also the 4 hours and 1 hour time frame will play a good role for you to determine when the high and low of the week has been formed. You understand? So the key things is what, know where the point of reversal will be and the nearest draw on liquidity. The point of reversal is your turning point for the week. For every week, there's a turning point, and in every week, there is a pool of liquidity that price is reaching for. Once you have known these two things, you look for the weekly manipulation template inside that turning point, and also you look for your market maker buy or sell model. The yeah, market maker buy or sell model. So this is the daily charts, and you can see the entry here. So let's go down to the 1 hour. Let's just see how we are able to determine the high of the week and the nearest draw on liquidity. So the nearest draw on liquidity was the previous week's low, the low made on 2nd of December, on Monday, 2nd of December 2024. That was the previous week's low. That was the low we are targeting, and our points of our turning point or point of reversal was the weekly fair value gap in line with a daily fair value gap. These are the two things I use: a turning point or a point of reversal and the nearest draw on liquidity, in line with the market maker buy or sell model. So let's go down to the 1 hour. Okay, this is the 1 hour. Okay, let's see. Yeah, this is me trying to, or my execution. Yeah, this is the 1 hour time frame. GBP 1 hour. Monday price action. Monday traded up, did its manipulation, but did not take out Friday's high. Monday traded down, and Tuesday we saw Tuesday trade up towards into a fair value gap that was left on Monday's price action. Then came down, traded below Tuesday's low, causing a break in market structure. Now, the break in market structure is a very important tool that you can use to determine when the high or low of every week has been formed. A break in market structure validated Monday's price action to be the high of the week for me, and price came down, went up into what, a fair value gap. That was all I needed for me to take my execution, and came these results. Market traded nicely into the fair value gap, and Thursday eventually took out Wednesday's high, but my stop loss was far above it. Yes, I do give I'm not the owner of the market, so I do give more like space for my stop loss, more like a breathing space. Let me just say breathing space for my stop loss. And here it was the entry, and we have the execution, fine execution. Let's go back to trading view. Monday, Monday's price action. Monday did a rally back into the weekly and daily fair value gap. Monday didn't take out Friday's high. So we saw Tuesday open, price opened and did a manipulation and respected the fair value gap that was created by Monday's price action, traded nicely and what went and broke below Tuesday's low. Now, trading below Tuesday's low, this was a break of structure for me, or break in market structure for me. And this break in market structure validated Monday to be the high of the week for me. So once I knew Monday was the high of the week, or Monday, once I've determined the high of the week, like I said, every rally, if I'm bearish, once I've determined the high of the week, every rally should be seen as a suspect rally. And what should you do? Sell into the rally. So after the break of structure, it validated Monday to be the high of the week for me. And once price went back into a PDI, which this is a fair value gap, I had to do just one thing: took my entry, my stop loss, my entry point, and my stop loss just above here. How to give breathing space for it. Yes, I am not the owner of the market. Market can do its things, and fortunately for me, um, Thursday's price action did a manipulation, but never had to get to my stop loss, and it just traded down to our target point. Now, inside this, we have the market maker buy model. The market maker sell model. This could be your original consolidation. Yeah, this will be your original consolidation. And Monday's price action, this is your smart money reversal. You can use this as the smart money reversal. So how do you determine the smart money reversal? For me, a break of structure should determine your smart money reversal for you. A break of structure should determine the smart money reversal. So this can be our smart money reversal, SMR, the smart money reversal. After we have determined that this is the high of the week. So what validates this to be the high of the week? A shift or a break in market structure here. See, price broke below this previous day's low. This determined this to be the smart money reversal, making Monday to be the high of the week. Using the weekly manipulation template, Monday became the high of the week, and price traded down, did a manipulation. This is form of a Judas swing on the 15 minutes time frame. You can see it very well. You call this a Judas swing. Yeah. Now, what is a Judas swing? This is a term coined by ICT, just like a fake move. Yeah, fake move for some person that are not fully aware that this market is bearish. You can see it and he said he is bully, but no, it was going into what this fair value gap, did this thing, and we saw price trade down, but still went into our entry. The move came on Thursday. We still got another Judas swing. Price traded above Wednesday's high, but didn't get to the stop loss. We thank God for that anyway. And we just went down to previous week's low. This is wonderful. To previous week's low, hitting our target. Previous week's low, hitting our target. And this is something I executed nicely for some person that says I didn't take this. This was the trade I was taking. You can see it here, and I took it, managed my risks as well. And at this point, I had to, after I got to my target, I had to just, that is just it. Price went to our target and previous week's low, and this is the execution. That is it. So what are the key things you've learned today in this price action? For every week, try to determine a point of reversal and the nearest liquidity pool that price will take, the nearest liquidity pool that you're expecting price to take, and that is just it. You can, the market maker model played a very role in this trade, and for every week, in every week there is a market maker model. There is always a market maker model. So this is a smart money reversal. Smart money reversal has always happened inside a point of reversal, which is what a PDRA. Remember, a point of reversal comes in form of a PDRA, which can be a fair value gap, another block, a breaker block, a mitigation block, just the different PDRAs that ICT has taught so far. So you determine your smart money reversal. How do you confirm, validate or confirm your smart money reversal? A break in market structure confirms a smart money reversal. For me, that is my model. Yeah, a break in market structure confirms smart money reversal, and once you've confirmed your smart money reversal, the point you called your smart money reversal can be determined as the high or low of the week. Let's say you're bullish, that should be your low of the week. If you're bearish, that should be your high of the week. And once you determine this, if you're bearish, every rally up, you see it as a Judas swing. What is a Judas swing? Just a fake move. Sell into the fake move and target the short-term liquidity. Yeah, it depends on how you trade. This can be a good TP for you, a take profit for you, and that is it. So thank you for watching this video. Please do like and subscribe. More of this will be coming your way every week. Yeah, every week. Do where to subscribe. You can tell someone about the channel. Let them subscribe. We'll also do have a series of the market maker model. Yes, I will teach the market maker model. Just like as the topic on this market maker model, the weekly manipulation template, and as well we will then have to put everything together to see how we are able to determine the weekly range for each week. Yeah. So this is the goal. GBP trade breakdown. Thank you for watching. Do where to like, subscribe, and leave your comments. I anticipate, or I would like to see your comments. Feel free to comment with your questions. Every question will be answered. Just drop your question and it will be answered. It's a new trading week, and most likely tonight will be on Tuesday morning. Yeah, tonight or Tuesday morning we'll be dropping the week's commentary for this week. Yeah, so lots of good stuff for this channel. Remember, I say this will be our classroom. Yeah, we'll do more of learning, and we'll be sharing insight to ourselves, and see how we can become better traders. Better traders. Yeah, the goal is for everyone to be profitable. But for you to be profitable, you have to put in the work. That's the truth. You have to put in the work. You have to dig deep. We are coming up. I'm coming up. I'm not a big trader, sorry to say, but yes, this is my documentary on my journey as a forex trader towards profitability. So it's a good thing that you found me, and for the person that haven't found me, or for the person that will be watching this video soon or later, we will be profitable. Let us work. So wish you guys a good day and a good trading week. Thank you.